Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. So in this video I'm going to share with you guys 5 companies that are undervalued at the moment. As you know, the S&P 500 is up quite a lot. I think a year to date is up about 27%, which is absolutely amazing. If you, of course, from a Sharia compliance side of things, we cannot invest in the S&P 500, but genuinely, if I could, I would have put all my money into the S&P 500 if it was Sharia compliant, because as you can see right now, we are basically up 27%, and basically that means 20% higher than where we were at the beginning of this year. The Dow Jones is up about 18%. The FTSE 100 is actually doing all right, 8%, not bad. Okay, that's beating the inflation and so on. The Nasdaq Composite is actually 31% up. So as you can see, when you see this type of thing, it makes me worry a little bit, because that means we've come a long way, and in these companies, there's a lot of companies that are really overvalued at the moment. So I don't know whether we're due for a correction. So maybe 10% down, 10 to 20% down from now on. I don't know what's going to happen. You know, when Donald Trump get basically in power, I don't know if things are going to change, if things are going to continue the way they are. According to the analysts that I've been listening to, when it comes to Donald Trump, he likes the stock market. He always brags about the fact how much it's up since he became president, especially in his last term and so on. So we will see what happens. But again, as always, what do we not? We don't need to worry about these kind of things. The stocks will go up, stocks will go down, but what's important is that you have a goal. Then you need to make sure you focus on your goals. And I keep saying this because I've got a lot of messages from brothers and sisters on the Patreon account. By the way, if you haven't joined us at the Patreon account, please do so. You can message me directly here. I will of course message you back and so on. And you can join us on the Discord. You've got access to a lot of things as well. So I have been getting questions basically from a few brothers and sisters with regards to, I bought this and that a while ago. Now I'm down 20, 30, 40%. What do I do and so on? Of course, I'm not a financial advisor, but what I'm saying is you need to focus on buying high quality businesses. Make sure you understand the business model. Make sure you can hold on to these companies when things are not great. I've got in my portfolio a lot of companies that have not done well at all over the last year or so. But what I have been doing is just adding to these companies, because I know these companies will turn around at some point. Okay, maybe right now, Wall Street is kind of neglecting these companies, but in the long run, I know they will be good. So be mindful of those kind of things. Be mindful stocks will go up, it will go down. But the most important thing for you and for us is just to stay on the course and just try your best to make sure you ignore the noise and focus on your goals, inshallah. Now that out of the way, let's have a look at the 5 companies that we're going to talk about today. Some of these companies we've talked about before, and you probably know them already. The first one we're going to talk about is UK-based company GSK, and this is a pharmaceutical company. They used to also own another company called Halal, I think, where they have a consumer product. So they did that spin-off recently. Right now, the market cap is 69 billion market cap. Of course, it's UK trading company, but there's not a lot of information from the UK websites and so on. So I'm just going to use information on the US version side of things. So it has a wide economic mode, $34 right now, dividend yield over 4.6%. I think this is the highest that we're going to look at today. The payout ratio is 19%. Again, when it comes to UK companies, is basically you can't find accurate information for dividends, so you're probably better off to either go into simply Wall Street or go into the actual websites and so on. Annually, you get $1.57. Basically, dividend safety of D-. The 5-year growth rate when it comes to revenue is 7%, and the 5-year the compound annual growth rate that is, and when it comes to EPS about 15%. Profit margin, return on equity, return on invested capital is decent. Free cash flow right now, we're looking at about $6.6 billion. Free cash flow yield of a 10%, and total return the last 10 years, we're looking at about 2%. Revenue growth expected to grow about 4%. EPS is expected to grow about an 8% next year. 41% discount right now. $558 per share is where they think the price should be. Now, if we look at this, you can see a year to date, the company has not done anything. For the year, it's exactly almost the same. Wall Street analysts is saying it's a strong buy. Wall Street is saying it's a buy. And as you can see, we've got 2 strong buys, 1 buy, 3 holds, and 1 sell. And as you can see here, $45 per share, 29% upside from where we are right now. If you look at the earnings expectation moving for basically this company. As you can see, EPS is about 8%, 7% there, and then a 3%, 5% basically for the following few years. The next one that we're looking at today is another pharmaceutical company, another UK-based company, AstraZeneca. The company has done quite a lot recently because of the situation that's happening with the CEO and a couple of other people that work for the company directly or indirectly in China. So we will see what comes out of that. Since actually went down on the day when the news came out, about 8 whatever percent. I think it bounced back quite a bit. I'll share with you guys basically how many shares I own and so on at the end of the video. So right now it's 209 billion market cap. It's probably one of the biggest, if not the biggest, when it comes to the UK based working in the FTSE 100. Currently it has a wide economic mode. Price is $68 per share, dividend yield of 2.2%. The payout ratio again 71%. Again, there's different websites with different information. The 5-year growth rate and the dividend safety is also similar. A lot of different information out there. $1.49 is what you will get. C is basically the dividend safety. 17% when it comes to the 5-year revenue compound annual growth rate, 66% when it comes to the EPS, and profit margin we're looking at about 13% right now. Return on equity of 16%, return on invested capital of 11%, and almost to $7 billion of free cash flow right now. Free cash flow yield of 4%. Total return in the last 10 years 8%. Revenue growth basically next year they're expecting about 7%. They also expect about 15% when it comes to EPS. 13% discounted right now. $78 per share is where they think the price should be. And looking at year to date, as you can see, is up about less than 2%. For the 1 year, about 5%. And as you can see, Wall Street is actually saying it's a strong buy. Seeking Alpha is basically saying it's a buy. So if we click this, as you can see here, we've got 6 strong buys, 3 buys, 1 hold, no sales whatsoever. $88 per share, 29% upside from where we are. This is probably one of the highest qualities out there when it comes to pharmaceutical companies. And in terms of the EPS, where you can see about 14-15%, double digits is expected for the next few years. And when it comes to basic revenue side of it, basically 7%, 5% or almost 6%, another 5% or so for the next couple of years, which is absolutely amazing to see. The next one we're going to talk about today is a company that I actually used to own back in the days, Barrick Gold. I think when I started doing this whole YouTube, I think I used to own it at the time. Currently has a market cap basically $30 billion. It doesn't have any more right now. $17.66 is basically where it's at. I think I sold it basically when it was slightly higher than this. I can't remember. I'll check again. Dividend yield right now we're looking at 2.2%. Payout ratio 37%, and the 5-year growth rate 15%, and the dividend streak. So they don't really care that dividend streak. So basically they do increase it though for the last 5 years about 15%, which is quite nice. It's basically 40 cents is what you will get for every share of this company that you own. And dividend safety of B minus. The 5-year revenue growth rate is about 11%. EPS is minus 20%, which is not great. Profit margin, return on equity, return on invested capital is okay. It's about $1 billion of free cash flow right now. Again, free cash flow yield of 2%. The total return in the last 10 years, we're looking at about 6%. Revenue growth, we're expecting about 18% the next year. Then they're expecting about 43% after that. Morningstar is actually saying it's about 20% discounted. $22 per share is where they think the price should be. Now, looking at the company year to date, you can see it's about minus 2%. For the 1 year, it's almost a flat. Wall Street, Seeking Alpha, Quant are all saying it's a buy. If we click Wall Street, you can see that we've got 9 strong buys, 6 buys, 7 holds, and then $23 per share. That's about 30% upside from where we are. Seeking Alpha analysts, well, looking at Wall Street, they're expecting about 28. That's what we've seen. 48, 45, and then almost 10% there. And when it comes to revenue side of it, again, high double digits for the next basically 2 years, which is amazing to see. The next company is one of the biggest companies out there, is Taiwan Semiconductor. This company has been undervalued for quite some time. It has a market cap of almost 800 billion right now. Wide economic mode, $195 per share. Dividend yield of 1.2%. The payout ratio is 8%. The 5-year growth rate of 7%. And dividend streak is just 1 year. This is one of those companies that they will increase 1 year. They might not increase it next year, but they are consistent. Basically over the 5-year average, basically it's about 7%, which is decent. $2.33 is what you will get for every share of this company that you own. Safety C+. The 5-year growth rate for the revenue side of it, EPS, is really good. Profit margin, return on equity, return on invested capital, probably one of the best out there. Free cash flow right now, $25.5 billion of free cash flow. Free cash flow yield of 3%, and total return in the last 10 years 24%. revenue, they're expecting it to grow about 25%, then 26% when it comes to EPS, which is absolutely amazing. 14% discount right now. $215 per share is basically where the price is at. Now, this is the only company. This company, the only problem is you cannot buy it with trading 2 at 2. I'm not sure if you can buy with other companies, but I managed to buy it on my family and account. For basically that's an ISA account, so I don't know how that works in comparison to the rest of the brokers out there, but I did manage it. By the way, if you want to get access to the family portfolio, don't forget to join us here where you will see it basically live. Okay, so right now you can see Wall Street is saying strong buy, quantity is saying strong buy, and Seeking Alpha is actually saying it's a buy. If we click Wall Street, you can see 12 strong buys, 4 buys, 1 hold, no sales whatsoever. They currently expecting the price to be $229 per share, and that's about 17.5% upside from where we are. If we look at the estimation for moving forward, EPS about 36%, 25%, 16% for the next couple of years. Again, at high double digits when it comes to revenue side of things. This is probably one of the best companies out there, high quality business, and the fact that AI is now booming and everything else, this company will benefit. Because remember, those companies like Qualcomm's, Broadcoms, and Nvidia's, and all of them, they designers, once they design those chips that they want to be made, this is the company that makes it. So they manufacture those whole thing. Okay, right. Final company is SLB, Schlumberger, 62 billion market cap, narrow economic mode right now. This is one of the oil companies out there. Is a part of the energy companies. $43 per share right now. Dividend yield of 2.5%. The payout ratio 32%. The 5-year growth rate is actually negative. I think they must have cut it not long ago. Dividend streak of just 2 years. Annually you get $1.10, and dividend safety B+. The 5-year growth rate when it comes to revenue side of things, we're looking at about 2%. EPS 16%. Profit margin, return on equity, return on invested capital, high double digits. Free cash flow $5 billion. Free cash flow yield of 9%. Total return in the last 10 years, unfortunately, is a negative 4%. They're expecting the earnings to grow about 5% next year. Revenue to grow about 5% and EPS to grow about 5% and 9%. Total return in the last 10 years, 23% discounted right now, and that is $57 per share is what they think the price should be. Right now it's 43 in fact. I can't read today. Now looking at this, a year today, the stock is actually down about 16%, which is not great. And when you look at again another 16% for the 1 year, Wall Street is actually saying it's strong buy, quant saying is a hold, Seeking Alpha analyst is actually saying a buy. And you can see 19 strong buys, 10 buys, 1 hold, so no sales whatsoever. $57 per share is where they think price should be. That's about 32% upside from where we are, which is very interesting. And then when you look at the expectations moving forward, as you can see, double digits, 8%, 11%, if you just focus on the first 3 when it comes to EPS. And then almost the double digits here in 2024, so it's all 10% almost, and then 5%, then 6% for the next basically 2 years, which is interesting. So that's the 5 companies I wanted to share with you guys again today. This is a bit of an entertainment. Of course, you do your own research and find out a bit more information about these companies. When it comes to Sharia compliant side of things, I use Zoya a lot. Sharia compliant side of things, this is the standards that they use. Based on that, you can see these companies are Sharia compliant. This one has the highest when it comes to interest-bearing debt. And in fact, it wasn't about a year ago or so, this company was actually not Sharia compliant. So you have to be careful with that. With the rest of them, they're absolutely fine. But yeah, that's the 5 companies I wanted to share with you guys today. If you are enjoying this content, please make sure you like the video, subscribe to the channel, and join us at the Patreon account, inshallah. I'll just quickly show you the companies that I own that we talked about today. Is only one of them, so I just need to find it. And that's AstraZeneca. As you can see, I'm actually down about just 1%. I do own, I think, about 40 shares. It bounced back. I remember it was about 7-8% when this whole madness happened, but it has bounced back for basically over the last week or basic couple of weeks. In fact, the last 3 months is down about 18%, which is not great. But just for this week, it's up almost about 3%. So we'll see what happens with the company anyway. Overall, that's what I want to share with you guys. If you're enjoying this content, please subscribe, like I said. And also, I'm currently putting together the video for the entire portfolio update, so I can't wait to share that with you guys, because I haven't changed a lot, but a lot has happened, and basically there's a few things that I want to share with you guys that I haven't shared over the last few months. So yeah, I look forward to sharing that with you guys. Have a wonderful day. Assalamu Alaikum.